Hey everyone, my name is Sean and welcome to Invest with Fire. In this video, I want to talk about how to start investing in a Roth IRA if you're a beginner. I've been investing about 12 to 15 years. And those first couple years, I didn't actually invest into anything. I spent a lot of time reading, researching, and looking into what people invest into. And the more research I did and the more reading I did, I learned that the Roth IRA was probably the best investment vehicle that I could ever start investing in, especially if you're a beginner. Here is my Roth IRA portfolio. And as you can see, my current value is $118,000, almost $119,000. And I started investing in this Roth IRA about 12 years ago. There is a lot of hype going on in the stock market right now. When you have people 10xing, 100xing, 1000xing their money by putting all their money into Tesla. You have people doing option trading, right? And you're taking $50,000 and turning it into $27 million. I totally get that. Why would you even invest into a boring old Roth IRA index fund? It's too slow, everyone's doing it. Why should you even do that? Look, I totally understand. And this is the way I think about it. I think of investing as a pyramid. And at the base of the pyramid, that's just pure personal finance. Are you budgeting? Are you making sure you're not spending $500 on avocado toast? Are you sure you're not postmating all your dinners and then spending $400 just on dinners? And after you do take care of that personal finance, do you have an emergency fund with 6 to 12 months of living, just in case if anything happens? So once you take care of all that personal financing stuff, that's when you can start looking into more investing options. The next level I would say is if you have a 401k, just make sure you're doing the match. Whatever your employee is contributing, make sure you match that because that's free money from your employer. Then look into a Roth IRA. Because a Roth IRA is tax advantaged. So what that means is that your earnings aren't taxed. Taxes will take a big chunk of your earnings too. Then you consider looking into stocks. Then you can start looking, okay, I'm gonna put $10,000 into Tesla. Then I could 10x and 100x my money. And then after that, you could look into option trading. And with option trading, you could leverage your money and really make a lot of money, or you could lose a lot of money too. Make sure you take care of your foundation first before you start going up the ladder and taking more risks with your money, because at least you'll have something to lay back on just in case if you fall. Take a look at the calculator to see how much your future self would have if you started investing into a Roth IRA. And these are the kind of calculations that you need to do in order just to plan for the future and understand where to put money in. Because if you understand that you put the max into a Roth IRA now, you can see what is the end game of that. You know, what's the point of putting $6,000 into a Roth IRA account now versus YOLOing that money into GameStop and trying to make $1 million. And let's say our investment goal is $1 million. And let's say you're 20 right now and you want to retire at 65. You have 45 years to accumulate that money, and your initial investment, let's say it's $1,000. And your rate of return is 8%. And where did I get 8% from? 8% is the annual rate of return for the US stock market. Taking a look at Investopedia, the annual rate of return is roughly 8%. And that's from 1926 to 2018. And we'll take a look at this S&P historical annual returns, and you can see, you know, the stock market goes up and down, right? You have periods where it's down for a year or two, right? Or this period, right? 1973 to 1974, negative 29%, negative 17%. And you need to understand that the stock market is not always going to go up, regardless if you just all you hear is stonks, right? Whenever the stock market goes down, I just think that is the opportunity to buy stocks at a discount. And that's how you increase returns, by just dollar cost averaging in no matter what, if it's up or down. So your periodic contribution, let's say that's $6,000, and you're contributing the max to a Roth IRA because you are a good investor. And your contribution frequency is per year, and you're compounding annually. Let's just say inflation is 2%, your marginal tax rate, let's say it's 2%, and your state tax is 10%. And let's see how much you have after 45 years. Boom. You have $2.5 million in your tax deferred account. And if this was a taxable account, you would have $1.8 million. And that's how much taxes would eat into your investments and your portfolio and your future gains. And that's the power of compounding and just having your money in the market. I always do these kind of projections because it helps me figure out what's the point of all this? What's the point of putting $6,000 away and not really seeing it until you retire. I mean, that's a long time. We'll go into the pros and cons of a Roth IRA. Pro, your earnings aren't taxed. Versus a 401k or an IRA, your earnings that you gain in your investments are taxed at the end whenever you pull them out. Versus the Roth IRA, all your earnings are not taxed. So whatever money you pull out, they're not taxed. The second pro of a Roth IRA is that you can actually pull out your contributions from your Roth IRA whenever you want to without any tax consequences. Another pro about the Roth IRA is that they have a first-time homebuyer exception. If you're buying, building, or rebuilding your first home, you can actually pull $10,000 towards that investment. Now, the cons of a Roth IRA is that there's a max that you can contribute. Right now, you can only contribute $6,000. So even if you wanted to do $10,000 a year, you just can't do that. Another con about the Roth IRA is that if you're making too much money, you can't actually invest in a Roth IRA. So how do we start investing into a Roth IRA? Well, first step, make sure you take care of the foundation of your pyramid. Make sure you're budgeting, make sure you have your personal finances in order, and have that 6 to 12 months of an emergency fund, just in case if anything happens. And after that, if you have a 401k, try to meet your employee match. So if they have a match of 3%, try to match that 3% so that you get that free money from your employer. Second part, go online and look into a brokerage. So there's a different couple things that I like about M1 Finance. First is a deposit. And I can set up different frequency schedules to deposit my money. So you can see switch to recurring schedule right here. I can set these different frequencies, for example, week of the month, monthly, bi-weekly, or weekly. In other brokerages, it's a little bit more of a pain and you don't have this many options to set up these recurring deposits into your Roth IRA. Next, what I love about it is that I can easily change up these percentages of what stocks to bonds or whatever index I want to invest into. Some user interfaces of other brokerages aren't as nice and it's a little bit harder to reallocate your funds. The next thing, what you're gonna have to do is research into which index funds you want to invest into, pick your index funds, and what allocation of stocks to bonds that you're gonna invest into. And you can see the different slices I have. I have VTI, BND, VXUS, and BNDX. My allocation is about 80% stocks to 20% bonds, and I know it could be a little bit riskier with that, but I try not to play around with too much of my foundation. And I stick to boring, easy index funds because I know I'm gonna diversify my investment portfolio in a bunch of stocks. And I'm gonna keep it safe and conservative, and I'm not going for those huge gains because this is pretty much kind of like my emergency fund too. Now, you don't have to invest in index funds, but I personally just choose something really conservative for my retirement. And you can actually invest in individual stocks in your Roth IRA if you want to. And I chose VTI and VXUS for my stocks because VTI is all the stocks in the US and VXUS is all the stocks outside the US, so it's international. And BND is for US bonds and BNDX is for international bonds. I try to diversify a little with my stocks and I don't want to invest fully into the US just in case if anything happens. And if you don't want to get bogged down by which indices to invest in or what your percentages are or changing up your percentages based on how much you want to risk, there's also other brokerages out there like BetterMint where they will just take care of everything for you. That's totally valid too. You want to start investing now so that you could get the power of compounding on your side and also get those dividends start going in and reinvest those dividends into your portfolio. So the important thing is don't get bogged down. Keep things simple, okay? And what you can always do, you can always reallocate in the future if you want to. You can increase the percentage of stocks you have compared to bonds, or you can go more into bonds. The downside of investing into some robo advisor that takes care of everything for you is that they charge a higher fee. But in the end, it's not gonna be that much more, only unless it's a mutual fund. If it's higher than 1%, don't do it. Just know that index funds, they usually have a lower fee anyways. So the next step is try to do the max contributions. That max is at $6,000. The reason why you wanna contribute the max is that so that your money can start compounding as soon as possible. Because the more money that you have working for you right now, the more money you'll have for your future self working for you, and so that you can live your best you. And next, what's personally worked out for me is just dollar cost averaging in. So if the max contribution is $6,000, and if you want to spread that over 1 year, you're going to take $6,000, divide that by 12, and you're going to invest about $500 per month. It's not a big shock of just investing $6,000 all at once. You can just spread that out through the year and just budget for it. And lastly, the final step is just trust the process. Continue to dollar cost average in. If the market goes down, that is just your opportunity to buy more stocks at a discount. So that's it, everyone. That's how you become a millionaire in your retirement. And it's that simple. You know, you don't have to make this super complicated. I know there's a million things out there, especially in investing. I'm just more risk averse, and I just want to make sure that I have a safety net and a foundation for my personal finance and my investment portfolio. And this is why I keep things conservative with my Roth IRA. And with the extra money that I have, I do more riskier investments with my taxable account. I hope you found that valuable, and please keep it simple. Start investing in your Roth IRA if you haven't already, and I hope you all have a great day.